Hello friends, today's topic, when will the markets recover? I am Dr. Bharath Chandra. Purpose of the video is financial education of society. The market continues to be weak. The downward trend started at the beginning of October 2024. Markets are currently at an 8-month low. Number 1, Nifty 50 change today minus 1.1%, change from the lifetime high minus 13.9%. 2. Nifty Mid Cap 100 change today minus 0.9%, change from lifetime high minus 17.8%. 3. Nifty Small Cap 100 change today minus 1%, percentage change from lifetime high minus 21.3%. February is the fifth month of monthly negative closes for markets. This is the worst downturn markets have been since 1996. The last time Nifty saw a decline of 5 consecutive months was between July and November 1996. Nifty has faced a 5-month losing streak only twice in its history. The longest losing streak on record remains 8 straight months between September 1994 to April 1995. Although the market weakness was broadly expected, it may be disappointing for many investors since they might have not seen such a price and time correction in their investing journey. Investors with more than 5 to 10 years experience in stock market may be more comfortable in such a situation than less experienced investors. In fact, it is a good learning experience for all investors since there is more to learn as an investor during bear phases than bull phases. The question in everybody's mind is how much more will markets fall and when will this bear phase end? Although nobody can predict exactly when the downtrend will end, we can study history and be prepared with our actions. History of bear markets in India. March 1986, Sensex level 574, maximum fall minus 39% and time to recover 30 months. Reason, US market crash. October 1990, Sensex level 1295, maximum fall minus 31% and time to recover 9 months. Reason, economic crisis in India. April 1992, Sensex level 3888, maximum fall minus 50%, ending date January 1994, time to recover months 22, reason Harshad Mehta scam. September 1994, Sensex level 4281, minus 39%, time to recover in months 59 months, reasons Asian currency crisis. March 2000, Sensex level 5001, maximum fall minus 48%, time to recover in months 45 months, reasons .com crash. January 2008, Sensex level 17,649, maximum fall minus 56%, time to recover 35 months and reasons global financial crisis. January 2011, Sensex level 18,328, maximum fall minus 25%, time to recover 33 months, reasons weak global economy. March 2015, Sensex level 27,957, maximum fall minus 22%, time to recover in months 24 months, reasons demonetization, GST implementation. January 2020, Sensex level 40,723, maximum fall minus 29%, time to recover 10 months, reasons COVID pandemic. October 2024, Sensex level 85,978, question mark, time to recover, reasons economic slowdown, tariff war, higher valuation. You would have observed the Nifty has fallen between 20 to 40% during bear phases many times in the past. Currently, Nifty Sensex has fallen only around 14% from a recent high. So more than the price correction, time correction has taken in the last few months. This is why investors are being frustrated and losing patience. Also, if you observe the data of how much time markets take to recover to previous highs, except for one or two occasions, markets have recovered to the previous highs after around 20 to 30 months, the start of the fall. So even if anybody is very optimistic it should take at least first half of this year for markets to rally. Generally speaking, it is always better to be conservative in our estimates of market recovery and returns. Such a thought process will ensure that you are not disappointed easily. Most investors with less experience were expecting 20 to 30% per annum returns from stock markets. Hence, they would be more disappointed than others in this downtrend. This is the historical data of Indian market. We need to be aware of it and keep it in mind in the future too, since if you have a long investing journey ahead of you, there will be many such phases. Investors cannot control market movement. However, what is in our control is our reaction and behavior when markets go through the tough phase. As long as you are a long-term investor with a horizon of 8 to 10 years, you have invested in good stocks, mutual funds, make sure you follow the below points. A. Don't stop SIP, SCP. B. Don't sell due to the panic because of market fall. C. Don't borrow and invest in stock markets. D. Don't keep waiting for market bottom. Invest money in installments and phases. The market is testing your character and patience. The investors who give up and exit markets lose the opportunity to create good wealth in the long term. The investors who stay strong and go through such tough phases are most of the time rewarded for their patience and discipline. Even though many investors may be aware of how market behave in bear phase, it is still important to remind and motivate them now and then. Also, reminder to stay away from futures and options trading. We have been hearing many stories of complete capital getting wiped out after attending some courses on F&O trading. End of the video, here is the question. Approximately by what percentage is your portfolio down from its highest point? A. Less than 10% down. B. 10 to 20% down. C. 20 to 30% down. D. More than 30% down. If you are not the member of this channel, this is the time to subscribe, press the bell icon, send the video to all your friends. The video is good, press the like button. Thank you for watching. Bye bye. All the best.